Let's talk about how a trader can make a recovery. So I was a little bit careless. I got a little bit emotional.
Okay.
I saw all the signs, but I ignored them. How do I make a recovery?
Now, when you say recovery, you have to be careful here, because if you've lost everything, the only way to recover is actually to, to go in and get your ammunitions back.
Do I need to sit down again and come up with a new? Because remember the last time Esther was here, we talked about trading plan and planning your trade and trading your plan.
Yeah.
Does that mean that I'll have to sit down and come up with a new plan, or perhaps even a better
Sure,
plan?
sure. Basically, trading is about strategy. If you lost your account, basically you had the wrong strategy, because that's the major problem. Because no matter how terrible...
So you're saying nothing could go wrong even with a good strategy?
Not
in the event where...
Even if anything goes wrong,
okay,
it's not like you're losing everything. Because the major problem we have...
So even if you had a good plan, is it possible to have a good plan and then... Or you're saying it's not possible to have a good plan and then lose an entire account?
No, you can't.
It's not possible.
If you have a good plan, good money management plan, good risk management plan, you can't lose your account.
Remember we also talked about, remember when Esther was here, she talked about the emotional aspect. You might have had a good plan and then maybe for some reason you got too emotional.
That's the issue.
And then you got
when I'm saying having a good plan, then you also have to follow the plan. Because some people have a very good, solid plan, but the issue is they don't follow the plan eventually, because when they start trading, the emotions set in. But what basically it's saying is that if your trading plan is good and you're following your plan, basically you can stay in this game 10 years, 20 years, and you're fine, making consistent profit. But what we're saying is that if you've lost your account, basically what I want to say this morning is that the issue is not the market. It's not the FX market. The major issue is that you don't have a good trading plan. So basically, if you want to have a comeback, what we recommend you do is that you fund your account again, and then take off from where you left off. But this time, remember what caused the problem you had, and then begin to do the things right, correctly. Typical example, they'll tell you don't risk more than 1 or 2% of your account on a trade. Meaning if your account is $1,000, you don't risk more than, worst case, $20 or $30 off that part.
Bet or go higher than $20, $30. I can bet up to half, $500.
Well, you shouldn't do that, because the way
even if I have all my ammunition, I have all the tools right, I have looked at the market, I'm using this analysis and that analysis and this tool and that tool.
Now, you see the mistake I've seen with a lot of traders is that $1,000 is a very small amount of money. You understand? But have you thought about $1 million? If you have $1 million, are you going to risk $500,000? When you look at it from that other side, you understand why I said a trader should not risk more than 1 or 2%. Especially if you're a trader and you have a dream, you have a plan to actually grow your capital to $1 million, $2 million, $3 million, $10 million. It might actually not be. It might even not be your capital. Maybe you're trading for a company and they have an asset worth $10 million and you're trading this for them. You can't afford to risk 50%, like risking $500 out of $1,000. So with that mindset, you have to bring it into your small capital also, because you expect your small capital to become big capital. So with that mindset, you don't risk more than 2-3% of your account on any trade. What we recommend traders do is that instead of risking, because when you're trading, you're not trading one currency pair. You could trade 3-4 currency pairs with different trading strategies, on those currency pairs. So instead of risking all your account on one trade, why don't you open several currency pairs with different trading strategies, such that you're distributing your risk like that, quote unquote, such that even when anything goes wrong, it goes wrong maybe 1 or 2 trades, but you have the rest of the trades to cover up. That's why if you look at Warren Buffett, for instance, he has one of the best portfolio selection when it comes to the stock market. Why? He's able to come up with a portfolio that is consistently profitable. It's not like all the stocks are making money, but he's able to come up. So imagine if Warren Buffett has just one stock in all his portfolio. That's terrible. So what we're saying is that another way to actually manage your risk is that instead of risking all your account on one trade, why don't you open several trades with different strategies on different currency pairs, such that consistently you can be profitable?
Okay, so start small, even if it's $1,500. Get the mindset of not being putting yourself too much at risk. So that when you get to a point where you had so much money, then you can move higher.
You can still do the same thing and be profitable consistently. Yeah.
Okay, so I'm thinking, what should a trader who's trying to make a recovery, what apart from a good plan or a new plan, what else can he do?
Now, a trader who's lost his account too many times affects you psychologically. And one of the best ways to get your confidence back is, for instance, I think one other time I spoke about Zulu here,
Zulu trade,
that
yes.
funny Zulu concept. Zulu is not doing badly. You could actually come back to the market with some investment products, that does not sort of have an influence on your emotions with a very small amount of money. By the time you see some of the fact that, this market can actually work again, what you're doing is that you need to build back your confidence, because confidence is very important. Typical example, right now we had the euro going up. Why? Because there's confidence or a sense of, traders
optimism towards
that the eurozone is going to pick up. In the same way, you need that as a trader in yourself, that actually, this can actually make me some profit. But if you can't do that, what I also recommend is that, let's assume, for instance, you lost $10,000. Don't fund your account with $10,000 again. Why don't you fund with 1,000? Why don't you fund with 500? Get back in the game gradually. Then before you go back up, instead of actually going to start from up there again, that's another very good way to set up a comeback. Go back and start small.
Also, what if I want to believe that this kind of scenario, losing an entire account, will probably happen to an individual trader, someone who doesn't have somebody trading on his behalf? Would you recommend that, okay, this trader, we don't know what his emotions are, how battered or beaten down he is. Could he, at this point, just hand it over to a fund manager or someone else to trade on his behalf?
Sure, you can do that. You can do that. If you've lost your confidence and there's someone else who has confidence and can actually do it, and you still want to take part in the currency market, sure, you can do that. But most important, the reason why you lost, which was your money management, you have to make sure it's also in place with the manager that is trading for you, because that's the most important thing. Your money management is like your backbone in currencies trading.
Okay, interesting. So, well, I guess we've gone through that now. Let's talk about the market outlook and all that's happened. We had a meeting over the weekend. European policymakers, Angela Merkel and the French president, and they have announced that they would rescue or to the end of the month. So, what kind of impact has that had on currencies, especially currency pairs?
Well, I think across the board, I would expect people to start selling the US dollars right now. The US dollar, it's not like it's weak, but the euro seems stronger. And even currencies like Canadian dollars, currencies like Australian dollars, currencies like New Zealand dollars seem stronger than the US dollar right now. So I would recommend, wherever you have the US dollar, you sell. So if you have a currency like Euro USD, you're buying. If you have a currency like Pound USD, you should be buying.
So let's tie that to somebody, because I know there might be somebody out there who has lost all of his account right now and is, and listening to you telling to take position here and take position there.
You see that this is the issue traders have. You maybe watch on TV, or you heard on radio, or a friend calls you and tells you, "Excuse me, go and buy the Euro USD right now," because they feel that person is an expert, or he knows what he's talking about. They forget about the money management and go take all the risk. To me, that's a gamble. You don't do that. Your money management is like your major life source in trading. So with that same money management, no matter where you trust the signal you're getting, you still have to make sure you put your money management in place. So right now, if you're buying the Euro USD, if I'm telling you the Euro USD might go up, for instance, I don't expect that you still don't put your money management in place. It's very important. It's your lifeline. It makes sure you still stay in the game when things go wrong, because they're actually going to go wrong. Okay,
so the investor himself, apart from listening to taking advice from what Michael just said, should go on the internet to look or listen to the news or track this latest development from the Eurozone.
Then, we spoke about technical tools, your moving averages, your candlesticks. If you do your analysis right now, you see that everything is in favor of what I'm talking about. We have strengths of other currencies apart from the US dollars. So everywhere you see the US dollars, you sell. You said US dollars.
Okay, so what would be your top? I know you've talked about the euro going forward this week, or it's still Monday. We don't know what's going to happen.
Yeah.
These markets can be very volatile sometimes, especially now that we still have this debt crisis in the eurozone. But in the last week, we saw the dollar rallying, and of course, I'm sure many investors or many traders took positions, in that dollar and didn't expect that meeting to come up.
But you see, if you look at it technically, because I'm looking at the chart right here, we have technical indicators are showing that the dollar was losing its strength. We have double bottom. Okay. For instance, I'm looking at pound Japanese yen here, and we have a double bottom there. If you check Euro USD, we have a double bottom. If you check our currencies that were going up, like USD CHF, we have a double top. So these are signals that we have told traders that it's time to get out of this trend.
Okay, so
it's
you're
getting
saying
weak.
Okay, that's interesting.
Yeah.
So before that meeting on Sunday between these leaders,
dollar was already losing strength. It was the trend was losing momentum. So it was a sign that get out of your current buy of the dollar and begin to look
wait
for
at the edge for euro.
If euro is going to go up, then you take a position on euro. Yeah.
Okay, that's interesting. So going forward, I know I've asked what should we be expecting this week? I know there will be volatility, but
I'm seeing the other currencies taking back what the dollar took from them. Like for instance, the Euro USD has been on a downtrend for quite some for like a month, and we see the euro is actually going back maybe almost 25% retracement. I'm seeing it going as far as 50% retracement level, this week. So people can actually load up, For those, but I still recommend you do your analysis. But you can actually start loading up Euro USD, Pound USD.
For now.
Yeah, for now.